entries to account for the revaluation of land on 1st of January 20.3 and 1st of January 20.4, respectively. Indicate the classifications of the accounts, whether it states statement of changes in equity, statement of profit or loss, or statement of financial position, or OCI. Okay, and then you have to calculate the profit or loss on the disposal of furniture for the reporting period ended 31 December 20.4, and then disclose the property, plant, and equipment reconciliation note as of 31 December 20.4. So that is the required. I think it's pretty straightforward. Let us start with required A. Prepare the general journal entries. So you were already supposed to have done this. Prepare the general journal entries to account for the revaluation of land on 1st of January 20.3 and 1st of January 20.4. Okay. Was this land revalued twice? Let us see. Additional, so we're given the land at 31 December 20.3. We're just given the balance there, 400,000. Let us look at the information that relates to land. Okay. Depreciation is written off land of buildings at 2% per year on cost, on furniture 10% per year on cost, and on vehicles at 20% per year on the carrying amount. All right. So this doesn't have anything to do with land. Land and buildings were purchased on 1st of January 20.2 for 500,000 excluding VAT. The value of the land on the date of purchase was 300,000 excluding VAT. Land is accounted for using the revaluation model. Land was revalued by an independent appraiser on 1st of January 20.3 to a fair value of 400,000, and again on 1st of January 20.4 to a fair value of 350,000. All right, what are your journal entries? Can anyone help me? What did you do? 1st of January 20.2. Let us start with that one. On 1st of January 20.3. Yes. Okay. Debit your land. How much? 400,000. Do you agree? You should have done this. Yeah, we're not coming to, not coming to class to do it. This is the question. Bullet number 2. So you didn't do the work. What were you doing yesterday after class ended? Huh? You're supposed to have done the work. Okay. So what was the cost price of the land? The value of the land was 300,000. It tells us that the value of the land and buildings, land and buildings were purchased on 1st of January 20.2 for 500,000. So that's the land and the buildings together. The value of the land on the date of purchase was 300,000. So that's when you purchased this on 1st of January 20.2. Land is accounted for using the revaluation model. Land was revalued by an independent appraiser on 1st of January 20.3 to a fair value of 400,000. Let us stop there. Up to there, we can answer the question already. The part where it says prepare the journal entry on 1st of January 20.3, right? So let us prepare the journal entry. What was the cost? It was 300,000 and it was revalued to 400,000. So what is the journal entry to account for the revaluation? Okay, so let me just, I'll have my debit here and my credit. So you should always just give this a title. So we'll just, let me just do it properly. And let me delete these. Okay, so we're going to just call this We're just going to call this the general journal. Let me call it like this, Bruno Traders. You always start with the name of the company, then general journal. The year ended 31. Okay, we have 2 years. We have 2 years, so I'll just leave it like that. I'll just call it general journal. Then we have our debit and our credit. This is in Namibian dollars. Namibian dollars. So the first one's 1st of January 20.3. You mentioned that you debit your
Land.
You debit your land with how much?
With 100,000.
Yes, debit the land with 100,000, and then we credit
Revaluation surplus with 100,000 as well.
valuation surplus. Okay, some people who had just bear with me writing on this evaluation surplus 100,000. Okay, let us go back to the question. And the important thing of the question, it tells us the required, we must indicate the classifications, whether it's statement of changes in equity, statement of financial position, statement of profit or loss, or if it's OCI. We need to indicate that. So land is what type of element? Asset, where would it appear?
Asset.
P, revaluation surplus, where does it go to? Other comprehensive income.
OCI.
Okay, it appears in the other comprehensive section, income section of the statement of profit or loss. And then you just say revaluation land. All right. Evaluation of land on. Okay, let's go back to the question. So we've done the part evaluation on 1 January 20.3, and it says also on 1 January 20.4. All right. Now we have to do the journal entry for 20.4. So as at 20.3, 1 January 20.3, we already have a fair value of land of 400,000, right? And now it has gone down to 350,000. So what do we do 1st of January 20.4?
You reverse the
Debit revaluation surplus? Debit revaluation surplus and debit revaluation expense. Okay, we're having two debits.
No. We
No,
debit revaluation surplus.
Debit revaluation surplus, okay. And credit land.
And
okay. Someone from who's on Teams wanted to say something? Okay. Debit revaluation surplus. How much? 100,000, 50,000?
50,000, sir.
50,000, exactly. Data land. Okay. Oh. Then we'll have that. Okay. Classifications. Other comprehensive income.
And the land is statement of financial position.
And statement of financial position. Yes. Okay. So the class and those on Teams have answered. All right. Now, the reason that we debit revaluation surplus OCI is because we previously had a surplus, right? So if we had not revalued it before, if we had just been given 400,000, right? That was our, let's say that was our cost price. And it was the first time dealing with a revaluation, right? So you're revaluing it from 400,000 to 350,000. Let's assume that's the first time you're doing it. Is this journal entry still going to be the same? Okay, what changes? Yes? But remember, land is losing value. Oh. So if land is losing value, we'll still credit the land. But instead of having revaluation surplus, here we're going to have revaluation expense, and it's going to go to the profit or loss. So the only reason we have revaluation surplus, okay, so it says if you have a revaluation expense or revaluation deficit, you always take it to the statement of profit or loss, unless it reverses a previous revaluation surplus. And in this instance, we had a revaluation surplus of 100,000. So this 50,000 is reversing the surplus. So let us say the revaluation, let us say it had been revalued to a lower amount. Let us say it had been revalued to 250,000. So let's say the cost, if the cost was 400,000, and then you revalue, let us say to 280,000. Okay. So if your cost was 400,000, let me not say cost. Let us say this, if this was your fair value. Let me actually write it in Excel. And so let's say you assume your fair value was 400,000. This was actually given. And then you had revalued it already. It was already revalued on 1st of January 20x3. So on 20.4, they tell you that the new fair value is 280,000. So now you're going to have to revalue it downwards, isn't it? So you would have said your 400,000 minus your 280,000. So you would have had a 120,000 downward revaluation. So if that was the case, what would you do? You do exactly the same journal entry. Let me put it here. But what you would have is that you would debit your revaluation surplus with 100,000 to reverse the old revaluation surplus that was lying there. And then you would have an excess. You would have an excess of, let me just shift these down. You'd have an excess of 20,000. This would now go to your evaluation. The profit or loss, that would be 20,000. And then your whole land would be 120,000 less. Okay. So what I wanted to show you is that if there's a previous revaluation surplus, first of all, reverse the revaluation surplus, and then the excess goes to your revaluation expense. If there hadn't been any revaluation surplus and you're revaluing downwards, take everything to revaluation expense and take it to your statement of profit or loss. So you have to look at the question, and the question will tell you there was a previous evaluation or there was no previous evaluation. So you will know what to do. Okay? Or you might be given a balance in the revaluation surplus account. If you're given a balance in the revaluation surplus account, then you automatically know that there was a previous revaluation. All right. So we've actually done, let us go back to the question. We've actually done the first part of the required, right? Which said to prepare the journal entries. Prepare the journal entries to account for land on 1st of January 20.3 and 20.4. That one we've done. Are we together? All right, let us deal with point number 2. Prepare the profit or loss on the disposal of furniture for the reporting period ended 31 December 20.4. The profit or loss on the disposal of furniture. So let us go and read where it talks about furniture. We read the first part, that was just depreciation policy. Okay, this might be important because it says depreciation is written off on buildings at 2% per year on cost and furniture 10% per year on cost. So that one you need to highlight. That information is relevant now for us. The 10% per year on cost. That is the depreciation method for furniture. The second bullet we've dealt with, it's irrelevant, it only deals with land. Let us go to the third bullet. So the third bullet deals with furniture. Furniture costing 22,800, including VAT, and with accumulated depreciation of 12,000 as at 31 December 20.3 was sold for 6,840, including VAT. Now, when you're given VAT, automatically you have to ask yourself, what is the VAT rate? We haven't seen them talking about the VAT rate yet, but in point number 5, it says, BRUNO is registered for VAT purposes, assume a rate of 14%. So we know the VAT rate is 14%. So now to calculate the profit or loss on disposal, what do you compare? What two things do you compare? Profit or loss on disposal. If I want to calculate, yes? The selling price? The selling price and the purchase price. One of them is correct. Selling price is correct.
It's the selling price and your carrying amount.
Okay, so okay, someone on Teams also say that. Selling price and then the carrying amount. Because the reason you use the carrying amount is that, remember this asset, this is furniture, it was depreciated, right? So it will lose value. So you cannot use the original cost price, right? So you have, because you would have used the furniture, you would have depreciated it. So there are two components, selling price minus carrying amount. If selling price is greater than the carrying amount, you have a profit. If your selling price is less than the carrying amount, you have a loss. All right, so let us go and do our workings. Actually, now since we are just calculating, since we are told to calculate, it's actually everything is workings, isn't it? Right? So when you're going to present it, so the first thing that we need to get is the selling price. Okay. Selling price. What is the selling price? Let's go to the question.
6,000. 6,840.
6,840. But we're told that that is including VAT. So we have to remove the VAT. All right. Why do you need to remove the VAT?
So you can get the original selling price.
All right. We want to find out the exclusive price, but the reason for finding out the exclusive price is because remember that VAT is going to be paid over to the government, to the receiver of revenue. So when MTC sells you airtime with $10, they don't keep the whole $10, right? They will keep $8.70 and the $1.30 they will pay to the government. So the VAT component does not belong to the entity. So we have to remove the VAT component. All right. So let us just do, I'll put the workings on the side here. Okay, so the sales price exclusive of VAT. You've already done VAT. How would you calculate it? What's the selling price excluding a VAT? 6,000. Are you sure? Okay,
Yes,
let us see. All right. So you're going to take, you'll say it was 6,840 times 100 divided by 114 to get the exclusive amount. If you don't know how to do this, you need to go back to, or why we're doing this, you need to go back to VAT that you did in year 1. Okay. So 6,840 times 100 divided by 114, the exclusive amount. So the sales price is 6,000. Okay. So here I can just put, let me number my workings. I'll put this as number 1. So I'll just refer to working 1. Okay. And so that my workings are on the side and then this is the answer that I'm giving. in a test situation. All right. So I'm referencing everywhere where I got the figures from. Then the next part that we need to obtain is the carrying amount. Okay. What is carrying amount definition? Carrying amount, you say this here, cost minus accumulated depreciation. All right. So what's our cost? Okay, we bought furniture costing 22,800 inclusive of VAT. We have to remove the VAT. All right, we have to remove the VAT from there. All right, so we'll say 22,800 times 100 over 114 to get the exclusive amount. Because remember, when we bought it, we can claim back the VAT from the receiver of revenue.
20,000.
Get an amount of 20,000. So that's our cost. All right. What is our, so what's our accumulated depreciation? Okay. So let us, it tells us that we have
2,800.
accumulated depreciation of 12,000. So it says on 31 March, furniture with costing 22,800, that was the cost price, with accumulated depreciation of 12,000 as of 31 December 20.3 was sold for 6,840. All right. Now, when did we sell this furniture? 31 March 20.4. This accumulated depreciation is at 31 December 20.3. So we depreciated it in the current year as well, isn't it? All right. So we'll have to calculate the depreciation for the current year as well. All right. So let us just deal with accumulated depreciation. We'll say the balance brought forward. Okay. Or we'll just say the balance at 31 December 20.3. That was 12,000. So that was given. And then we have depreciation for 20.4. Now let us go and see what the policy is. It tells us that furniture, we wrote point bullet number 1, furniture is depreciated at 10% per year on cost. So we know that the cost price of this furniture, we've already calculated. The cost price of the furniture was 20,000. So we can just calculate the depreciation on that. So the depreciation for 20.4 would be 20,000 times 10, and that would give us depreciation for the whole year, right? But we only 3 months, so it's times 3 over 12 to get depreciation up to 31 March, January, February, March. All right, so 20,000 times 10% times 3 over 12, we get an amount of 500. So our total accumulated depreciation, the total accumulated depreciation is 12,500. Are we together? That's the 12,000 plus the 500. So that's our total accumulated depreciation. So now what's our carrying amount? Carrying amount, you told me, is your cost minus accumulated depreciation. So we'll say, therefore, carrying amount 8,000 minus 12,500. We're going to get 7,500. All right. So that's just 20,000 minus 12,500. So our carrying amount is 7,500. So then we can put our carrying amount here. Let me even put it in negative. Okay, and this one, I'll call it working 2. All right, we've done the working there, right? Yeah. We're just going to subtract it. All right. You don't really have to put a negative, but what we're saying is just sales minus your carrying amount. All right. We're removing the books. We're removing 7,500 from the books. You can think of it in that way. But anyway, now have we made a profit or loss? A loss. Okay. The loss on disposal, 1,000. So that's a loss on disposal. Okay. Loss on disposal. So what did the question ask us to do? Let us just go, have we answered the question? Calculate the profit or loss on disposal of furniture for the period ended 31 December 20.4. So we've calculated the loss on disposal. We have the answer of 1,500. Loss on disposal of furniture. Are there any questions? There are no questions. So if the carrying amount was less than 6,000, if the carrying amount was 5,000, for instance, then we would have made a profit on the disposal of furniture. All right. So there we are done with that part. Let us go and deal with requirement number 3. Disclose the property, plants, and equipment reconciliation note as of 31 December 20.4. All right, let us disclose that. And so there are a few components that we have to deal with here. We have land, buildings, furniture, etc. All right. So you know the format of the PPE note already from first year, but I'll show it. So again, you always start with the name of the company, BRUNO Traders. All right. Okay. Property, plant, and equipment. Reconciliation note. Property, plant, and equipment reconciliation notes. Okay. For the reporting period ended 31 December 20. Okay. 2.4. All right. So we have a few items. We have land. We have buildings. Now you must show these separately. Okay. So in this question, we had land, buildings, and furniture. We have vehicles as well. Right. And then we put a total column. Now, in most questions in a test situation, they won't really require you to put a total column. All right. In most questions, in most instances, it is usually not required. But if it's silent, then just put the total column. If you don't have time, you can ignore the total column because we're going to mark each of the components separately. Unless now you need to know the total that you're going to show in the statement of financial position, then you will need the total column. All right. So the format, and then you say the carrying amount at 1 January 20.4. So you might see in some books it will say gross carrying amount. All right, that just means the total carrying amount. So the carrying amount at the beginning is just your cost less accumulated. The good thing about this question, these figures were given to us. And let's go and look at it. So it's your cost minus accumulated depreciation. What is very important when you're dealing with this is your symbols. All right. So cost would be a positive amount and accumulated depreciation would be reflected as a negative amount because accumulated depreciation is being deducted from your cost. All right. And so let us go and look at the question. Okay. So land, these are the balances that appeared at 31 December 20.3. So those are the balances that already exist. We can use these balances. So for me to say cost, it's not really, it might not really be cost, as in this instance, land was revalued, right? So this land was bought at a value of 300,000, right? So, but now the value of the land is 400,000 as it appears there, since they're using the revaluation model. So you're not going to use the cost price of the land, you're going to use the fair value at the beginning. So that cost is either the cost or the fair value. Okay, so that's cost or fair value. So and that will only be applicable for the land, since we're not dealing with revaluation of buildings. So land was 400,000. You know that it is not going to be depreciated. Okay, let's just indicate that all of this is in Namibian dollars. Okay. Okay. Accumulated depreciation, nothing. Buildings were given the balances on 31 December. 200,000 is the cost, and then accumulated depreciation is 8,000. So you just put that in. So it's 200,000. Okay, sorry, I made a mistake here. Let me just do it like this. Okay, so this was 200,000 and this was 8,000. So your carrying amount, so you see the 200,000 is positive while the 8,000 is negative. So the carrying amount is just the 200,000 minus the 8,000. All right, then we're going to get a value of 192,000. For land, it's 400,000. Okay, and then we have the same for the furniture and vehicles. Okay, let us just do that. Oh, let me just ignore that. All right, I'll come back to the total. Let's do furniture. We have 100,000 and accumulated depreciation of 40,000. So it's 100,000. Then we had 40,000. So the carrying amount of land is 60,000. All right. And then the last one that we had is vehicles, 250,000 and 250,000 and 80,000. All right. Then your total, just want to shift this there. Okay. As I said, you can just ignore the total column. Most questions will tell you to ignore the total column, but if it doesn't, then you need to include it. Okay, so it will be 822,000. Then the other things that will be considered in the property, plant and equipment, in the property, plant and equipment reconciliation note. So you're reconciling, what is it? You're reconciling the opening balances, the balances at the beginning of the year to the balances at the end of the year. That's just what it means. All right. So if you're reconciling the balances at the beginning of the year to the balances at the end of the year, you're going to have some movements during the year. And what can the movements be? The movements can be depreciation, right? If you buy property, that's additions, right? If you sell, that would be disposals. Revaluation will also be revaluation will also be part of that. All right, so let us just deal with I'll put all the headings, okay? So let us deal with the land. We have the revaluation. We know land was revalued. You would have depreciation for the year. You would have additions, and then you'd have disposals. So after taking all of that, after you have your balance at the beginning of the year, and you account for all of these aspects, then you come to your balance at the end of the year. And then so I can just put that here. So carrying amount, this one will now be at 31 December 20.4. Okay, let me remove these figures so that you don't get confused. All right. So land, did we have a revaluation of land during the year? Yes, we actually did workings for it. What was the value revaluation of land?
100,000.
Was it 100,000? Look at the date. Remember, we're dealing for the year 2004. So in the current year, we had revaluation of 50,000. It was a downward revaluation, right? So this was a revaluation of land, and the amount was 50,000. So I'm showing it as negative since it was a downward revaluation, isn't it? Okay, so then your balance here at 31 December 20.4 should be your carrying amount at the beginning, and then you account for your movements. Let me just put this as a heading as movement for the year. All right. So this block down here is for your movements. So we had a downward revaluation, which was the movement for the year. So our carrying amount at the end of the year would just be your 400,000 carrying amount at the beginning minus the revaluation. And we have a new carrying amount at the end. So the carrying amount at the end of the year of land is 350,000. All right. So remember, when you're dealing with the revaluation, the cost is always replaced by the fair value. All right. The cost is always replaced by the fair value. But for the other ones, the cost will always remain the same. Okay. Let's deal with buildings. Buildings. What information did we have relating to buildings? Depreciation. We don't have any other thing, right? Depreciation is written off for buildings at 2% per year on cost. So the only thing that we account for the buildings is depreciation. Okay, so you might have to do workings. Maybe let me do the workings below. Okay, so your buildings. Okay, so your depreciation would be, what was the cost of your buildings? 200,000. Say 200,000 times 2%. Okay. Okay. So since this is another question, I'll put these buildings. This is just going to be working one. All right. So depreciation for buildings is 8,000. And we know that depreciation is subtracted, right? We're subtracting it from the carrying amount. Is it 4,000?
It's 4,000, sir.
Okay, so this is supposed to be 200,000. Okay. 200,000 times 2% is 4,000. Yeah, it is 4,000. It's correct. 4,000 is correct. So the amount is 4,000, not 8,000. Sorry.
Yeah.
So that is 4,000 depreciation for the year. Okay. Now with the buildings, this is a bit different. Your cost doesn't change, right? So at the bottom, you can put your cost price. Since we didn't buy anything, there's nothing in this movements for the year that has affected our cost. So our cost price remains the same as 200,000. But look at the accumulated. Oh, sorry. Let me just put this on silent. Sorry about that. Okay. Accumulated depreciation and depreciation work together, isn't it? So accumulated depreciation is just depreciation over the years. Are we together? So we had accumulated depreciation of 8,000 already, and then depreciation for the current year is 4,000. So what's our total accumulated depreciation?
12,000.
It's
12,000.
12,000. 8,000 plus 4,000 is 12,000. Are we together? Okay. So now this is the trick. If you said your carrying amount at the beginning of the year, 192,000, this we already knew by saying 200,000 minus 4,000. So we say 192,000 minus 4,000, we must arrive at 188. Are we together there? Alternatively, you can say your original cost price was 200,000, right? Minus our total accumulated depreciation, including the accumulated depreciation for the year. So 200,000 minus our total accumulated depreciation of 12,000, it should bring us back to 188,000. All right. So that's how you can say either you take the current amount and you adjust it for the movements during the year, or you can just look at the balances. You had 200,000 depreciation, 200,000 cost price, and then what was your total accumulated depreciation? The 8,000 that you started with, plus the 4,000 for the current year. All right. Do we have time to do the one more? Furniture. Furniture and vehicles. Maybe furniture we can finish. We won't finish vehicles. All right. Furniture, we already did the workings for the furniture that was disposed, right? But we have other furniture. We have total furniture, 100,000 worth of furniture, and accumulated depreciation was 40,000. Okay, so let us deal with the furniture. Let us deal with the workings for the furniture quickly. Furniture. Okay, so we need to calculate the depreciation on the remaining furniture. We've already calculated the depreciation on the disposed one, right? So what is the remaining furniture? Our cost of furniture was 100,000. Okay, let me just put this. This is the remaining furniture. Okay. So our cost, total cost of 100,000 is 100,000 minus what was the value of the furniture that was disposed? Minus 20,000. So our remaining furniture would have been 80,000, right? Okay, because the 20,000, where do we get it from? Here. This is the furniture that was disposed. We're told furniture with the cost of 20,000 was disposed. And then let us look at the accumulated depreciation. And these are just the opening balances that we dealt with. So our accumulated depreciation, we were given an amount of how much? The total amount in the beginning, 40,000. So the total furniture, right, was 40,000 minus accumulated depreciation on the exposed, 12,000. All right, so 40,000 minus 12,000, our accumulated depreciation on the furniture, we're doing it as at this date, as at 31 December 20.3. These are just the opening balances. We haven't calculated the depreciation for the current year yet. So at the beginning, we have cost of 80,000 minus 28,000. Oh, sorry. Okay. So it's 80,000 minus 28,000. So this would have been the carrying amount at 31 December 20.3. That is for the remaining furniture, right? Then we calculate the depreciation on the remaining furniture. What is depreciation on the remaining furniture? Furniture is depreciated 10% per year on cost. All right, 10% per year on cost. So for the remaining furniture, cost price is just 80,000 times 10%.
8,000.
And get 8,000. So that's our depreciation for the year. So now we've calculated the depreciation for the year on the remaining furniture and the depreciation for the year on the sold furniture. The sold furniture was how much? 500. All right. So total depreciation for the year on furniture. Okay, I think time is almost up, but anyway, our total depreciation on furniture for the year would be 8,000 plus 500, right? So that is the remaining furniture plus the one that we disposed of, which we only depreciated for 3 months, 500. So your total depreciation would be 8,500. Then you put it there. 1,500. We didn't buy any more furniture, did we? No. So what would be the total worth of the furniture at the end? You can take your carrying amount minus your depreciation for the, sorry, did I miss something? Oh, the disposal. Sorry, I forgot the disposal. So your depreciation is 8,500. And then the disposal, what did we dispose of? The carrying amount of the furniture that was disposed was how much? The carrying amount of the furniture that was disposed was 7,500. So we have to remove the 7,500. The carrying amount of the furniture disposed. So then you take your carrying amount at the beginning minus your depreciation minus your disposal. Carrying amount of the disposal, you will get to 7,500. Okay, time is up. I would like to show you something, but I don't have time for this disposal. Oh, sorry. I don't have time. I'll post the solution. But for this disposal, what you can do, you can also have, you can have this. Your cost of the furniture that was disposed was 20,000. And then your accumulated depreciation on that one was 12,500. Okay, so 20,000, I'm removing the cost price. I'm removing the cost price, that's why I'm subtracting it. Accumulated depreciation, I have to add it back. Yeah, we're doing the opposite. Minus 20,000 plus 12,500 gives you the 7,500. So your cost price of the furniture, you're going to take your cost price 100,000 minus your 20,000, you're going to have only 80,000. And then your accumulated depreciation, you started with your 40,000, you had the 8,500, but then you subtracted the 12,500, you're going to get 36,000. 80,000 minus 36,000, bring it back to 44,000. You can go and watch the recording of this just so that you can get the explanation.